Good day, everyone. In this lecture, we'll talk about a symmetrical triangle pattern. Mostly, we'll see this kind of pattern in our actual charts when we are trading Forex, or we are trading crypto, or we are trading binary option, right? So, when you talk about symmetrical triangular pattern, the price can come from what above the pattern or below the pattern, or even at times it can come from the sideway of the pattern. So generally speaking about this symmetrical triangle, the market either wanders into a symmetrical triangular formations from above, when the market is dropping downward, or from below when the market is going what? Bullish, right? That is from a resistance area is coming downward, from a support area going upward. But it does it when the market does such thing, does such coming together, it does it in a very little convincing way. It doesn't do it in a way that it comes in a drastic move and begin to form that formation. No, it does it in a small meandering way. The market will meander into that forming that symmetrical triangular formation. But once it does that, then the range it forms will keep narrowing down. So it forms a ranging pattern from high to low. So the higher becomes lower and the lower becomes higher. And this kind of thing happens mostly on the chart when markets keep meandering and keep forming the higher high and the higher low. When the market gets to a squeeze, most of the times we see this when a fundamental news is coming up or something similar like that, or when a market is trying to have a breakout, right? So when a breakout of this symmetrical triangle occurs, it occurs either in any direction, bullish or bearish. So we have a 50-50 probability the market will go bullish or the market will go bearish. Most of the times, because of the manipulation or something in the market, we call manipulation in the market tends to fake out some breakout and continue in the other direction, or fake out in the other direction and take out the low or take out the high and move in the other opposite direction, right? So, but I think you guys will be thinking about, I thought this looks like a pennant pattern. Right, let me give you guys the difference between this symmetrical triangle and a pennant pattern, right? Now, a pennant pattern is a continuation pattern. Why this symmetrical pattern is a neutral pattern, right? So a continuation pattern will have a such move and it will continue in that direction. It's coming from downward and begin to squeeze in that pattern in this range, or begin to meander in that range and form this kind of triangle, symmetrical triangle, or form this triangle, there is 80%, 90% probably the market is going to go continue in that direction if it is a continuation pattern. So the difference between Pennant pattern, which is inside continuation pattern, and the symmetrical pattern, is that in Pennant, the market has a drastic move from upward or a drastic move from downward. It doesn't meander into that forming that formation. So it comes with drastic move. Maybe you have like 4 or 5 bearish candle, sell, 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 sell. Then it began to do form this higher high, higher low, lower high, and lower low. To it forms that squeeze. The same thing applicable to bullish pennant. So if you want to know much about bullish pennant, check my video where I talked about continuation pattern. Is the first lecture there. You will understand what a pennant pattern is. It's similar to this, but the difference is that the pennant has a drastic move, while symmetrical triangular pattern, which is a continuation, which is a neutral pattern, has a meandering move. So take a look at this. You see this here? The market tends to do what? Meander slowly, may have a small movement, take out the high, come back again, high, low, and began to move into forming these formations, triangular formations. No, we have this market meandering upward small and come down, form a support, forms a resistance, support, resistance, and begin to squeeze, begin to narrow down. If you have a trend line or a channel, something a trend line, and draw this a trend line, you find out that there's going to be a squeeze. Right? I'll still show you guys this on an actual chart though. Now, here is forming a lower low, lower high, higher high, higher low. So all these kind of formations, market begin to squeeze out, and in this symmetrical triangular pattern, which is a neutral pattern, we have a high, or we have 50-50 probability that market is going to break in any direction, either bullish or bearish. Take note of that. And this chart, this picture here, is the market coming upward, then 50-50 percentage that the market is going to do, probability that the market is going to go either bullish or bearish. So this is a symmetrical triangle to the upside. This is a symmetrical triangle formation to the downside. So let's take a look at the symmetrical triangle formation with a traditional target. If you want to trade this, if you want to trade it. So a symmetrical triangular formation from the upside coming downward, when the market begin to form this high and low and begin to narrow down and begin to meander and begin to squeeze up in this formation, you measure from the beginning of where the candle begin to start, when you draw your trend line, to the bottom where it forms a support zone, then your target should be the similar thing when the market breaks out, right? So if the here is 70 pips, you measure 70 pips from here and set your take profit and place your pending order if you are using pending order to trade, right? Either from the downside or either from the upside. This is a symmetrical triangle from the what? Downside. So the right hand side is a symmetrical triangle from the what? Upside. So the market tends to do what? Go bullish, hits a resistance zone, drops, form a low, support, high, resistance, low, support. So it begins to form higher. The lower are getting higher and the higher are getting what? Lower. So if you measure from here to this spot when the market begins to range, if you draw your trend line, use your trend line to draw this, measure from here, your target should be from that zone to similar pips from here to here. Should be the similar pips from here to here or similar pips from here to here. So it's a high probability, and that's why we call this symmetrical triangular formation a neutral pattern, because it can break out in any direction, right? So let's take a look at this on an actual chart. Okay, now this is a symmetrical triangular formation. What? Breakout to what? To the downside. Now take a look. Assuming it's a Pennant pattern, we have a drastic move, something like this. Say something like this, sell before they begin to what? Meander into that formation. But here, you see what happens here. You see, this is not a drastic move. So even if we look at this now, if you draw this trend line from here to here and draw from here to this zone, you can see that this will have a high tendency of forming that symmetrical triangle. But take a look at this. The high, the low are becoming higher, and the high are becoming lower. Now a breakout comes to this area. So if you want to take this trade, what happens? You measure from this zone to this zone, and what? It breaks down to the downside, which means the market hits breakout to this zone and did what? And came down to this side. But we have a mitigation or retest on this what? Peak formation or tiny formation or tiny narrow down of this swing here, right? So this is it about a breakout, a symmetrical triangular formation breaking out to what? To a downside. Let's take a look at breaking out to the upside. Now, this is a symmetrical triangle formation breaking out to the upside. The markets begin to see come down, narrowing down in this area and forming a higher high. The low are becoming higher and the high are becoming lower, higher low, higher low, higher low, higher high, higher low, something like that. Now, the markets came to a narrow squeeze in this area. So when you see such formation on your chart, you don't know what to do. Some people may call it a pennant, which is not a pennant, because a pennant comes with a drastic move. Like it comes from straight down, sell, without even forming a small higher high. Then when it begins to form this formation, we have a high tendency that the market is going to what? Continue in that direction. But this is a symmetrical triangular formation where the markets tend to do what? Break out in any direction, right? So here, we measure from this zone to this zone. So if you take measurement from this zone to this zone, if it is 80 pips or 90 pips, we have high tendency of targeting what? The same pips. Taking out this high, right? Measure these pips, you can put that as your take profit. But we'll have, this time around, we'll have some high probability or high manipulation in the market. When market tends to do what? Break out this zone and people will enter the trade, it will now pull back and break out to what? The downside, taking out the liquidity above these areas and continue downward trend. So this is about the symmetrical triangular formation on neutral pattern. So we have three types of pattern. We have continuation pattern, we have neutral pattern, we have what? Reversal pattern. So we still have different kind of patterns, so which I may cover up in upcoming lectures, so you understand more about patterns and strategies you can use to trade such pattern. So that is that about symmetrical triangular formation. Don't forget to like, subscribe, and share this video for people who wants to learn about Forex. Bye for now.